Good afternoon, everyone. You're all very welcome to Thursday's US session market open. So, of course, today we'll be taking you through the price action. We'll be taking you through the volatility, of course, from yesterday's US open and, of course, this morning's European Open, looking at the broader market movements through the course of the morning, of course, and then looking at data for the rest of the afternoon as well. So first things first, I suppose, without further ado, we are seeing bullish price action in the market today. We talked about yesterday, and obviously this morning in the Open, we are seeing that elevation in risk orientation. We are seeing risk assets continue to grind higher. We're seeing it in the European session with the DAX, the Euro stocks, the FTSE, for example, and we're also seeing that very, very clearly today in the US session with the S&P, the broader NASDAQ, and of course, the Dow Jones continue to grind higher. So a lot of those weekly highs was formed last week off the back of the FOMC. They've been completely obliterated in all of the primary major US indices as well. So we're seeing dollar weakness very much filter still to the downside. We are seeing, obviously, US indices, as I said, the S&P, the NASDAQ, and the Dow Jones leading the way to the upside, of course, as well. Now, when we look at broader dynamics in gold, gold through the course of the week is still very much back and forth. But where we've been over the last couple of weeks, market dynamic is still very much obviously holding to the upside, given the volatility from, of course, the early month buying, escalation in geopolitical tensions, and of course the FOMC last week. So obviously worth keeping a very, very close eye on that. And as I said this morning, we saw it in the DAX, we saw it in the Euro stocks and the FTSE. Broader market dynamic moves to the upside. So that elevation in risk orientation is still obviously playing out in the broader markets as a whole. Now, I suppose if we look at the economic calendar today, two things I think is really, really important. We, of course, had German data, German information coming out, obviously on course or on par. In fact, prices just becoming narrowly above expectation in this morning's session this morning with German data. Of course, we did also have core PCE, GDP annualized figures, and of course the weekly jobless claims all out. PCE or core PCE, should I say, came out higher than expected, marginally. Gross domestic product came out marginally under expected, and of course the weekly jobless claims came in pretty much on course as expected, just underneath that 200k figure. So data-wise, pretty much coming through, not really that much in terms of a data footprint move at 130, because of course we have seen those indices, the S&P continue to grind higher. We have seen, as I said, the NASDAQ continue to grind higher since 130. Despite this, it's up about 50 points in the NASDAQ. And of course, Dow Jones as well, which we've seen right through the morning from where we were yesterday, of course, continue to grind through and elevate itself to the upside as well. So as we speak, obviously, market dynamics is still very much bullish. Indices, as I said, is also still very much bullish as well. Now, if we isolate, looking at, I suppose, the intraday areas on the S&Ps, NASDAQ, and of course, Dow Jones, it's of course also important to look at your market profiles, your liquidity areas, and so on, of which we are going to do now. So if we look at the SPX 500, of course, we've had that kind of very, very clear conscious break. So yesterday, and of course, over the last week, that 4,000 level, a lot of options expiries coming in at 4,000 and that 4,010 level. We saw a very, very clear break last night. And of course, through the London Open today, we've seen, as I said, price action filter to the upside through that 4,050 level. So we are trading well above yesterday, and of course the price action level on the S&P over the last week, as of course we are seeing that 4,050 level being tested as we speak currently on the S&P. So worth keeping an eye. I think that area around 4,050 should become, I suppose, the fulcrum area for today, really to kind of watch and observe price action as we progress, of course, into the business end of the day, it being obviously the busier trading day of the week. Now, looking at the S&Ps, I suppose, from a kind of intraday levels, market profile levels, 4,028 is POC level, which is right down at the bottom of our range. 4,050 is still value highs, and we are trading, as I said, up around this 4,058, 4,060 area. So, of course, if you're really looking at that, your market profiles on S&Ps is really back down to where we were trading really, really, really early this morning prior to the London Open. So whether we actually get back to those levels Could be a little bit of a stretch today, but of course, keep an eye on that kind of 4045, 4050 level, which of course comes through marginally around those value highs. And of course, not to say we won't get a sell back to those areas, but just from a volume perspective, keep an eye on those accordingly. Now, moving across to NASDAQ, as we said, very, very, very aggressive break from where we were yesterday. And of course, pre-market this morning, 12.8s were broken fairly cleanly, 12.9s were broken fairly cleanly, and we're now pushing higher into that 13,000 level on the NASDAQ. So of course, NASDAQ, broadly speaking, really kind of conscious in terms of the price action, because of course there is a lot of upside room, which we'll look at now in a second. But of course, 12,997 value highs, 12,921 point of control. Now, when you look at the pricing on my index, is slightly off. There is about a 40-50 point differential between my pricing and, of course, the market profile. However, when you look at the broader range, there is still a lot of potential recovery for the NASDAQ. So if we start to see that risk orientation really continue into next week, then there's really a lot of upside potential for the NASDAQ, given that we've now taken out the FOMC highs from last week, given that we've also taken out the February highs as well around this 12.8, 12.9 level. We could very easily see another 400-500 point move in the NASDAQ over the next week, should this risk orientation continue. And I suppose that's going to be the big question, to see whether that risk orientation does in fact continue, whether we see that continuation in obviously the safer havens, the likes of your dollar, your bonds, etc., and you see movements into more risk aggressive assets. And that's why it's important to simultaneously look at the DXY. We're back into where we were last week, monthly lows at 102, but there is very much the potential for us to come even deeper than that and really have a run at this 101 level on the index. And if we start to see that 102 level give way, which looks like it's going to do at the minute, then you're really looking at that deeper runoff, which again adds or fuels further progression in risk orientated assets like your cryptos, like your S&Ps, and of course like gold as well, because of course you're seeing that dollar weakness very, very visible. And of course, with that DXY weakness, you can see it very, very clearly filtering through into euro dollar strength. You can see it very, very clearly filtering into cable strength as the price action does continue to move higher in favor of weaker or stronger currencies against weaker outperformance in the DXY as well. So last but not least then is obviously the Dow Jones. Now we are kind of forming short-term tops on 30s, just under 33,000 at around 32,900 today, into obviously US Open, which is coming up in the next couple of minutes or so. So of course, if we look at the Dow Jones as well, sorry, wrong ticker code, USA 30. Of course, we're seeing the value highs kick in here, 32,900. Now we have broken through the value highs. So of course, worth keeping an eye. Now, normally speaking, in a lot of market profiles, you will see like a bell-shaped curve where we have a tight narrow range, very, very clear accumulation. But today we can see very, very clearly the price action has extended in one direction. So I suppose that's going to be the filtering point of view, that if we do start to see profit taking on the buying side in the Dow Jones, we have a very, very nice clear runoff zone back in here around 32,700, 32,750. And that, of course, correlates with the element of us having point of control. So if we do start to see indices starting to give way, we start to see a little bit of selling coming through into those indices, US-based indices, look for potential return back to point of control. And of course, that does allow for a very, very, very nice potential 200, 250 point pullback into this region. So worth keeping an eye on that. If the profit taking starts to come into 230, then that becomes a very, very clear potential downside target for price action. Not to say it's going to happen, of course, because we would be needing a decent kickback in selling in some of these indices, given how bullish obviously the indices have been this morning. Just be very, very conscious and clear of that as well. So approximately 15 seconds to the open. So we'll just keep an eye on the price action into obviously 230 open. Looking at this volatility broadly speaking, just kind of looking at gearing kind of a consensus for dynamics into 230. Obviously S&Ps is still in control into 230, as too is the NASDAQ, with a very, very clear run up as well. But again, looking to see if there's any sort of corrections, pullbacks, because even here in the NASDAQ as well, your 12,840s becomes a nice little area, short-term run up. This is where the run up started this morning. Could we get a nice little pullback back into this region? We'll keep an eye. If the selling starts to come in, that does become a downside target. As to, as I said, is the S&Ps here at around about 4,030. So keep an eye on those areas through the course of the afternoon. We are seeing a little bit of profit taking coming in. But again, I would be kind of letting that kind of breathe for particularly the first kind of 15 minutes or so of the open into 3 o'clock, just to see does that sell-off become a little bit more sustained back to some of those value areas that we're kind of talking about here. And also making sure it becomes consistent, because you don't want to be shorting against what's been a very, very heavy run-up, only for the price action to then do a very, very quick U-turn. Initially, as I said in the first minute or so, markets are getting a little bit of a correction. You can kind of see it in all three: S&Ps, NASDAQ, and of course Dow Jones. But give it a couple of minutes just to see does that become more sustained, because as I said, you're just needing a little bit of clarification and a little bit of structure on that as well, broadly speaking. And I suppose looking at the economic calendar for the rest of the day, well, what have we? We've got Bakken and Kashkari speaking, and this afternoon we've got Mechler, should I say, from the Swiss National Bank. And of course, we do have Japanese CPI, industrial production and retail figures out tonight as well. So there could be some decent movement, particularly in the Asia session for the Japanese yen pairs. So worth keeping an eye on those as well. Overnight tonight, we do obviously have Waller speaking at 12. We've PMIs, non-manufacturing in China. We've got UK GDP tomorrow morning at 6 a.m., followed by German and European data in terms of, again, harmonized consumer prices, unemployment and retail sales figures. So worth keeping an eye on those as well, because that could be a fairly decent runner into European Open tomorrow morning with the German data. And of course, then tomorrow, lastly, we also have more growth figures, consumer sentiment figures. Fed speakers will be back on the wires again with more PCE data coming out. So it could be a fairly choppy day Friday into obviously the weekend as well. So just be kind of wary of that as well. All right. So I suppose just before we finish off, NASDAQ buyers have returned to NASDAQ. S&P buyers are holding on there at the minute. NASDAQ, S&Ps, as I said, also holding up relatively well. So of course, as I said, don't want to get sucked in too early. You just want to be making sure that you have a very, very clear structure. Me personally speaking, I will be looking to see, can we get back to some of these point of control levels down here, as I said, on S&P, NASDAQ and Dow Jones. And of course, in the back end, seeing how does this strength, weakness flare out or play out in the DXY as well, because that's going to obviously drive performance, as I said, into obviously today's close, particularly in the dollar pairs as well. All right, that's pretty much it.